Hey guys, how's everybody doing? Welcome to the channel. My name is Max. My little dog's name is Jackson. Jackson, come here. Is this what you want? All right, Jackson, be a good dog. All right. Anyway, Jax wanted to make an appearance today. Hey, Charles, thank you so much for being here. I appreciate you for being here. All right. Remember, not financial advice. Consult a licensed planner, please. All right, but let's take a look at this. Let me show you what I have. I was going to just pre-record this. I decided to just do this live because I thought you guys would like to do this too. I'm glad Charles is here too. Yeah, we're going to look exactly at what Charles is saying, and we can my metric picks up on the ones that don't do the bad stuff. My metrics, it picks up on the ones that do it the right way, that pay a yield, but pay it from where it's sustainable. Anyway, and sure enough, look at number 49 on my metric. It is SCHD. Now, usually we have to have a 5 or 6% dividend to make the list, but we put them in as an exception because it's interesting to see. In any event, all right, but it's whatever. Riser's a good one, super stable. Riser's one of the more stable ones out there. And then we have ADX, SPY, Big Y. Look at this. We have SPY and Big Y right next to each other. So we don't have to test them. We can see they're running pretty close for whatever reason. They're very similar. At least they have similar yields. All right. Then we have double QA and GPIQ. Now, those are both NASDAQ-related high-yield ETFs. Now, double QA is based on the equal weight of NASDAQ, so it should be more stable. But GPIQs, they have their own thing going on. I think they use some leverage and they don't ride on the whole portfolio or something, but either one of those could work. We have RSPA, which is the equal weighted SPYs, paying 9%. We have XLKI, which is the State Street Sector Fund based on the XLK. So this is like State Street's version of, I'm going to say, a FEPI or GPTY, because I bet it has those types of stocks. Or whatever. It's like State Street's Maggie, Mag 7 or whatever. Anyway, then we have GPIX from Goldman, the S&P high yield fund, paying about an 8% yield. Positive NAV upside. You can see none of these NAVs so far have been great. We're here at 40, and the highest on NAV return has been GPIQ at a 1.5. When you're this low on the list, there hasn't been a lot of NAV to go around down here. But anyway, that's getting ready to change. So here we have, you doing all right, Jackson? That's getting ready to change. So here we have ones that are doing better on NAV return. We have GPIX. We have, look at this one, Stride, STRD, paying about a 13.5% yield with actually positive NAV. T-SPY, same thing, paying about a 13% yield with positive NAV. And Triple QX, that one's from Nuveen. That's a dynamic overwrite Qs based fund. You could probably compare it with something like GPIQ. And then we have HCal. HCal is one I actually don't know that much about. Let's look at HCal really quick. I looked at it a long time ago. All right. So they have Warner Brothers Discovery. Wow. Alcoa. FedEx, man, everything they have is on fire, but the whole market is. What's that one? Cognizant Technology Solutions, CTSH. I've never can't believe that one's not in one of the funds we look at all the time, like like Blocks or Alti or something. Anyway, TKR, Qualcomm. Anyway, yeah, this one looks good. Heck yeah. Hasn't, to be fair, it really hasn't recovered its March high, whatever, but I mean, heck yeah. All right, good job, HCal. Then we have TDAC paying 10.74%, QYLG paying 5%. They only sell options on half the portfolio. I mean, then we have XLII, IDEVO, WIL, and WEEI rounding out 30 through 40. On this one, you have IDEVO as kind of the standout on NAV at 3.73%, which is good. But as we get higher on the list, we're going to have ones that are able to sustain some NAV and pay some yield. We'll see. Okay, at 29, we have SPUT, SPUT. And then we have JEPQ from JP Morgan, trailing 12 months, 10.3%. But they combine that with some good NAV. STRC, same thing, positive NAV, paying 11.5% yield. I know people really like that one. Then we have JEPI super steady, paying 8.1% yield. It's got some decent NAV. Really, Devo's the best looking one out of all of these on NAV so far. CRF from Cornerstone looks good. And now, of course, WiGold is incredible because it's based on gold. The NAV on this one's up 12%, but it's based on gold, not stocks. Of the stock-based ones, this Devo's pretty impressive. But then we're going to get to Soxy in a second. All right. Well, all right. Now in the top 20, it's going to get really crazy. So we have Soxy, we have SWZ, we have Chippy. Look at Chippy yielding 36%. We have SPIN, the State Street S&P based index or premium income fund. But heck, it has nearly 7% positive NAV, where none of these other ones have had that kind of NAV yet. Good job, SPIN. Anyway, QILD, ASGI, this one I know a lot of you guys like. This thing's had positive NAV, good yield, super steady. Yeah, that's a good one. Anyway, then we have XYLD from Global X, GLDI, another gold-based one. So maybe we should do GLDI against WiGold over here. Just to see what's going on. This WiGold's incredible. All right, let's go back to the top 50 list. Yeah, Gold Eye. I mean, heck, it wasn't doing as well as WiGold, but it wasn't nearly as volatile. All right. Then we have number 11, we have Goop doing a good job. 12% yield, positive NAV return, tons of NAV return, 15% positive NAV return based on Google. We have IAUI, which is based on gold, positive 8% NAV for the quarter, 11%. Once you get down to these are some of the best ones to have had, especially in hindsight. I mean, who would have thought? Aptly, I mean, you're killing it there. Super stable. You're up on NAV. You're getting your yield. Of course, iGold is really, iGold's up 17% this quarter on NAV. And then Silvo's up 10.7%, and that's NAV only. And then don't forget we had We have Gold Eye is up 5.2%, and some here. Oh, and IAUI was up 8%. So we have a lot of precious metals doing well here, but XYLG doesn't deserve to be that high. Anyway, but TSLP sure does. Look at this thing, 35% yield and the NAV for the quarter anyway. I mean, that doesn't, but for the quarter, the NAV's up 10% and you're getting this. It's like free money right now. Not super stable. It's only a 31 on stability. And, that's out of a score of 100, but oh well. But then number 3, you want a little bit more stability. You get you some K Gold from Howard down here at number 3. It's a 46 on stability, yielding 10.6%. And you guys can see number 2 and 1, are both on fire. But one's based on AMD and one's based on Google. And both of those have done really well, obviously, and both of these funds have also done really well. But yeah, that's impressive. That's a good look for K Gold right there to be that high. But yeah, let's look at GOW and AMDW. These are the ones to have. If you just would have had everything in these at the start of the quarter, you'd have NAV, you'd be set. This is, GOW in a quarter's time went from 63 to 71 NAV only, and AMDW went from 46 to 51 NAV only. Forget about the other stuff. Who even cares about that? The NAV, is growing on these. But then in addition, of course, they're paying dividends, especially all AMDW. My gosh. Anyway, hindsight's 2020. Got to figure out which one's going to be the one like that for next time. I bet Charles has an opinion. What do you think, Charles? Which one do you think is going to be of next quarter? I wish the Max Factor could look forward a quarter and it could show us which one's going to be on the Max Factor 3 months from now. Yeah. Okay. So yes, PFIX is like Riser and it's leveraged. Riser is usually on my stable decks. Riser doesn't really qualify to be on there either, but it's, I've mainly made the index for covered call and like higher opportunity things like FEPI and that are trying to pay 15, 20, 30% and end up. But I put things like Riser and things like SCHD in there just for comparison purposes. But anyway, no, Riser is a fair comparison. I think PFIX is in my. Look at this. I bet we can. But PFIX is in here somewhere. I think. I'm pretty sure. What is PFIX? Let's see if it is. This is my database right here. This is my proprietary database. Okay, and no, it is not. I have 3 P instruments in the proprietary database, and PFIX is not one of them. Anyway, I need to throw it in there. Yeah, that's a good. Thanks for reminding me of that. Thanks for reminding me of that. I think Riser's cool. I like interest rate hedges, but PFIX, it's the same thing. Let's look at PFIX on a weekly or monthly. Yeah, so, that's a good looking chart there. It says it pays 4.7 about. Yeah, that's a good looking chart. I'll definitely throw it on there. Charles. All right, Charles, what are you saying here? YMAG is the only multi-symbol covered call fund beating the Qs, and lately it is. Yeah, I guess you're right. YMAG, yeah, YMAG. I know Maggie. A lot of people like Maggie, but yeah. but that's this quarter. Who knows what will be happening next quarter? I mean, YMAG and the Qs. There's no way YMAG's beating the Qs, is it? Well, not really, but it looks pretty good. It's doing well against the Qs. Charles, Soxy's been, solid semis in a run, but for how long? Anyway, good job on that. PFIX is in options, 10-year notes, long puts over a year out. Yeah, so you have 40% in PFIX as a bond position equity hedge. Now, that's awesome. That's awesome. Just a few years ago, we did, we never even, public couldn't invest in things like interest rate hedges and all these things. Anyway, I think it's awesome. I think it is awesome. All right, so let's go back to the top 50. Well, I guess we could look at Bitcoin, but it's just grinding. I mean, it's at 90,350. It's been going straight sideways since Friday afternoon. I mean, hopefully the next move isn't down. Hopefully or if it is, it's just a quick fake out and then boom, straight back up. But maybe later on this weekend, maybe we'll, go for the greener pastures or something. We can always hope. Well, no, that's good to hear, Charles. That is good to hear. We could look at the diversified divas, I guess. Is this the latest? Is everything negative again? I'm trying to think if this is based on the latest returns. For a while, the SPY or the Qs were up, but I guess for a day or something. But now, so this right here shows the total return of a bunch of funds I like to follow: ULTY, Blocks, ULTI, K Yield, but also WPay, QLDY, LFGY, GPTY, Chippy. Doesn't do SOXY, but SPY and Qs. And on a cumulative basis, they're all sucking. But I mean, the Qs are down 2.4. The one that's sucking the least is QLDY, that's only down 2.8, which is impressive. They're doing those lightning spreads. And then the ones that pay the higher yield, sure enough, are the ones that are down more. But K Yield is impressive in there, that it's paying 30+%, and it's only down 7%. It compares well with something like WPay or LFGY or whatever. Compares really well with GPTY, which is a well-established fund that does a good job also. So in any event, there's some competition in there. I like these types of funds that are diversified and can switch stocks in and out. But it's been a tough month or two for these types of funds. And I guess this was the other day. All of these guys, all of these guys got killed the other day, evidently. All right, so let's go back here to the top 50. But yeah, I'd love to see K Gold that high. I mean, they're really serious about healthcare. Healthcare is the thing. Look at this XLVI. These State Street sector funds don't pay a lot, but they're super stable. You could go over here to the stable decks, and they're some of the most stable. I mean, yeah, XLVI is the second most stable one on the board of the top 50. We have SPUT, super stable also. That doesn't have anything to do with State Street. I'm trying to think who SPUT is. It could be State Street, but State Street's SPIN. Let's see, SPUT. I mean, oh, it's Innovator. Okay, well, I mean, Innovator has some cool ideas. Oh, yeah, this is 0 DTE puts. I mean, it looks pretty dang good. Whatever they're doing looks pretty dang good right there. They did lose in April, but they were writing puts. I mean, the market sold off. As soon as the market recovered, so did the fund. But yeah, that was ugly. That would have been an ugly week to be in this put. Drops from 26 within 2 days. It's trading at 22. I mean, yeah. And anyway, but the State Street fund would be spin, the State Street equivalent, the S&P, and this one pays a little bit better yield. I mean, it just barely took back its March high just recently. Oh well, I mean, no one's perfect, but yeah, no one's perfect. I need to start looking at other things more than just that. Hey, Froggy, what's up? We're just sitting here looking at these. I like some of these more esoteric rankings, like Max's Moxie ranking. Let's see. Now, the Moxie ranking just measures how much yield you have, and yield is a bad way to measure these. So that's one problem. It's measuring yield, and it's measuring yield per unit of risk. Now, it is good to keep risk low, but I mean, yield's a bad thing to measure it against. But anyway, but you guys would like this. It says ASGI is the best bet on the board per unit of risk. I mean, anyway, GLDI also looking good on Max's Moxie, SWZ, YGold, IDEVO, SLVO, high on Max's Moxie ranking. I used to look at this all the time, but it just measures the stable ones that don't just have a lot of super high volatility. But yeah, so those are ASGI, GLDI, SWZ, YGold, IDEVO, SLVO. Those are the good ones. That's Max's Moxie. We can look at the Quandex. Now, the Quandex is related to my sustainability, which is my max factor, but the Quandex looks over a longer time frame, but is also tax sensitive. Just like it factors in tax consequences of each of the return. Excuse me. Anyway, let's look at Quandex. I mean, heck yeah. Number one on Quandex is YGold. For one thing, I think Quandex, you have to have been around a year. If you haven't, you aren't on the Quandex. So there's some good ones. GOW, AMDW, KGold, awesome funds. They aren't going to be on the Quandex. So with that caveat that this is like an old guy's fund for funds that have been around at least a year. I mean, YGold's looking pretty tough to beat on the Quandex. And I mean, 1 year total return of 102%. I mean, SLVO is a 1 year total return of 54%. I mean, obviously, these are just knocking it out of the park on the Quandex. Look at Goop. I mean, Goop, 43% 1 year total return, but the quarterly NAV return is 15%, NAV only. And Goop's paying this yield. Howard's a big into trying to make stuff that's sustainable. So let's look at that. Let's just take a look. Let's take a look at Goop versus GUI. And we're looking for the quarter. I mean, for the quarter, Goop's doing a little better. But they pay less yield, so that's not super shocking. That's not super shocking, but I mean, they're both doing really well. I mean, okay. But let's look back at that. On NAV, GUI's NAV was only up 20 cents, and Goop's NAV was up, multiple dollars. but that's because GUI gave you back more of your return. And dividends, of course, the total return metric doesn't factor that in, but my max factor does factor that in, and so does the Quandex. But nevertheless, whatever, Goop definitely deserves to be on here, and GUI doesn't. GUI's not as ranked as highly on the Quandex or whatever, and I think, or I'm predicting it isn't. Yeah, and it sure doesn't look like it is because it's not nearly as sustainable. And or it may not have been around long enough to qualify, but yeah, those are good funds. ASGIs, I mean, iDevo, Soxy, Goldeye, GUI. Oh, they're okay. I'm sorry, GUI was right here. So GUI also did well, of course, but is a little, Goop's ranked 11th, GUI's ranked 23rd. I mean, GUI just takes a little bit, you have a little bit more yield, but a lot more risk. And it just, All right. So, Froggy, what have you been wanting to do? You've been wanting to get some more ASGI for a while. I mean, it always is knocking it out of the park, just if you look at metrics. You like that Christmas video? Well, good. Yeah. So next time I'm going to do it a little different. I'm going to give I felt so bad that Amy and the other influencers didn't get a word in edgewise. So next time I'm going to have like an hour pregame with just the influencers. And that would have been, I don't know why I didn't do that this time. I did have 15 minutes, but it was just me and Rod. So, but I'm saying next time I'll have like a pregame and we'll go back and everyone will talk about whatever they're doing. But anyway, yeah. But then after that, we can all ask them questions. I thought once we got into the crypto stuff, she started asking questions. I just felt bad that she sat there and just had to watch me option nerd boy out, fanboy out or whatever. Healthcare historically been an equity hedge. So yeah, I mean that healthcare, that one's, it's cool to have it's cool to be able to micromanage your retirement that much. In the old days, you'd be able to get a fund that sold covered calls, but you just kind of had to take what they had. Maybe you had JEPQ and which is a good one, and then you had QILD or whatever, and maybe one other or something. But nowadays, you can have ones that do covered calls on, on the health industry, or on real estate. I mean, it's an awesome time. Now, did you guys see my video today about? Did you guys see my video today about the hedged? What's it called? It's called BHedge. Dude, I was pretty excited about BHedge. Myself, I don't know. I mean, I'm trying to think if I have I don't know if I saved it in OptionStrat. I probably did. Well, anyway, just go watch that video. But I'm excited about BHedge. I think BHedge could be an interesting idea. Yeah, the video was jam-packed. It was too jam-packed, and I was into it, and I was thinking, oh my gosh, what have I done? I should have. Yeah. It was so jam-packed. There was a couple of times we still had a little bit of time left with the guest, but I felt bad because Amy hadn't got into word. So we had like another couple of minutes, and I said bye to the guest a minute or two early a couple of times to try to get Amy going and say, hey, Amy, what's going on? But anyway, because I wanted her to participate too. And which she did. And so anyway, but then everything got better as soon as we started talking about crypto. So, but yeah, no, I had a great time on that video. I think that, that Matthew Tuttle guy he's something else. But David Nicholas, there's a whole new breed of covered call guys, and they don't believe in capped upside. They believe covered calls are a sucker bet. And, anyway, and it's guys like David and especially guys like Matthew Tuttle. He has a whole webinar out there going, why covered calls suck. And he's talking about yield max the whole time, but not just them, other people like them. And he's saying those covered calls suck. They, and he has a whole webinar on it. It's interesting. Go check it out. But yeah, so he's coming out with a product called an Income Blast. I believe it's called Income Blast. And so he's going to own stock or own synthetics and then sell put spreads on different sectors of the economy. So I think it's going to be kind of like blocks, but his own version, and it'll probably pay a really nice yield and have uncapped upside. But yeah, I was really excited about that. And that Matt, and then we had, Matt Holcomb. He's kind of hard to get on. But he's the guy from Rex, and Rex is that fund's crazy. I mean, but he told me the other day that they hedged, and I looked, and yeah, they have, and I have a little thing here, and they had a couple of positions on where they had bought double puts. Thank goodness, and they did save themselves a little bit of money in that last pullback. But I mean, I bet they wish they would have waited and brought the fund out at a different date. He wasn't going to say that yesterday, but anyway, I really enjoyed having him on too. And I have all these guys scheduled for longer time coming up. The first of which being that I'm really excited about David, the last guy from Quantify. For some reason, I thought he was Return Stacked, and Return Stacked is a separate company. I mean, anyway, but I thought that was his idea or whatever. But their Return Stacked is cool too. So in any event, separate companies though. He's coming on Christmas Eve. So we're going to have an hour with him, and he's going to have an income product also that's based on one of his Return Stack products. It'll probably be like long bonds and long stocks, but it'll also pay a yield or something. Or he has one that's long Bitcoin and long gold, and somehow it's going to sell options somehow and pay a yield off that. So but he'll be on Christmas Eve. I'm really excited about that. And then after the new year, all the other guys will be on after the new year. But I want to get Matt Holcomb on soon too. I'm going to keep Matt. I forget. I had deals with some of these guys to come on, and I forget who I made deals with. I think maybe Matt is supposed to come on next week also. Anyway, but I'd really be interested to get any of those guys on. But yeah, next time I would do it, I would have a pregame with just influencers, even if it's like 30 minutes. And then I'll do the guys, the fund managers for 15 minutes. And then I'll leave 5 minutes between fund managers for us to talk. And I think, and if I do that next year, it'll go a lot smoother. Maybe I should even do a quarter. I've even thought about maybe calling it a board meeting and doing it quarterly or something. But anyway, making it more fun than it was yesterday. It wasn't super fun yesterday, but I like the way I've been doing this top 50 ETFs of the week. And I recorded a version, and I thought I need to do a daily factor tonight anyway. So this is going to be my daily factor show. It's just the top 50 of the week. So we can look at it by any factor you guys want. But I like my Moxie ranking. What's this ranking? Mox? I forgot what Mox is. Whatever it is, it loves SWZ and it loves XYLG. I think Mox is the same thing as Moxie. It's just a different way of, anyway, it is. Now it's coming back to me. Moxie, they're separate. I bet, anyway. Separate ways to look at the same type thing. It's all about risk-adjusted reward. But yeah, it'd be hard to go wrong with ASGI. I mean, look, it's number one on the Quandex. It's it's really highly ranked in the sustainability index. And that's what I do. That's what I think is good about the Max Factor. Yes, in my personal life, sometimes I make bad investment, like Amy, she has a whole channel called Bad Financial Decisions. And yeah, maybe I get too in love with the certain fund that's freaking, but anyway, whatever. Those types of funds though, I'm still look at things in a sane manner. And those types of funds will never be on the Max Factor because I require the fund to have positive NAV. You have to have, to rank highly in the Max Factor. Alti and Misty have been in the max factor for a little while this summer, because they did have positive NAV for a little while, but not very long. But because positive NAV is so key for these things when you're trying to compound. Of course, when you're compounding NAV that's going against you, that's it's not always a great situation. So anyway, I'm really satisfied. Sometimes I don't always follow this, and maybe I invest in a fund. I mean, last time I checked, ULTY was like 6th or 7th from the dead last on this list. But oh well. All right. Oh well. But let's just rank it by quarterly NAV return. I mean, that just be one way to rank it. Just go with the one the highest, and that's actually a decent way to do covered call. I mean, to do these types of funds, because if you just did that, and forget whatever the yield is just bonus. It doesn't even matter to you. This one happens to pay 16, but if you just like allocated to the ones that are positive on NAV, and of course the reason they're positive is because their underlying is gold or Google. And that doesn't mean gold and Google's going to keep going up. Their next rolling forward quarter may not be positive next time. But man, this would be a great quarter to allocate to any of those, because whatever the yield is just gravy. You have YGold, GOW or GOOP, AMDW, SLVO, TSLP, SOXY, IAUI. I mean, the yield on any of those is gravy, because that's just based on NAV return, but we could do it on sustainability, and it'll be the same funds though. GOW, AMDW, KGold, TSLP. It's just I measure the same thing in a little different way, but yeah, those funds right there, those funds have the whole. It's everything you want. It's NAV, it's yield, and its safety. Let's just measure it by stable decks. Riser's the most stable, but it has a hedged element in there. Just like PFIX. PFIX will be in here next time. But look at XYLD. That one is super stable. They sell at the money covered calls in the monthly time frame. It's too stable though. It's not usually a great investment. It doesn't, I bet you if we look at XYLD, it hasn't even taken back its March high. I'm just thinking possibly, because these guys sell at the money options, which is good for yield. They get a good consistent yield, more like a bond almost. But when you're selling at the money, you're giving up a larger portion of the upside than other funds like JFQ that sell out of the money options. But in any event, you can see it here in the return. It has like a bond-like profile. When the market goes up, this is, this almost is more like a, in any event though, that's not the worst looking one I've ever seen. Not the worst looking one. But yeah, you can measure it different ways. This is different ways to measure it, but I really think that my sustainability or my max factor, I think it does a pretty good job identifying the ones that are the better investments. But nothing's perfect. It's just looking at a slice in time. All right, but yeah, I'm glad you guys watched that video. You guys want to talk about anything, we darn sure can. Anything specifically, or any of you guys' funds on here, whatever. But yeah, I need to put that. I already forgot what's the name of that one I was supposed to put on here. PFIX. I remembered. Watch this. I'm going to slap it on here. This is my proprietary list. I just put MDST on there the other day. Do you guys know about that one? That's a good one. I put TDVI on there the day before that. Little growth dividends. WPay just recently became old enough to be on this list. But yeah, I'm hip on the newest ones. I always have all the newest ones. But yeah, somehow PFIX slipped through the radar. Somehow PFIX slipped through the radar, but it'll be on all subsequent Max Factors. You guys are my associate editors, and I appreciate it. Yeah, the video was jam packed. I was really happy with the way it turned out. And yeah, it went great. It went great. Like I say, I just feel bad I didn't use the others influencers' talents, because those guys are smart people, and the whole time was just me listening to me. I mean, well, I wanted them to ask more questions, but I should have built it into the format better or whatever. But whatever. I got on there, and a couple of those guys I did want to talk options with, and and I wanted to ask those questions. I think some of you guys wanted to hear some of the things we talked about. So hopefully it was good. I just felt bad for Amy. But anyway, but yeah, it'll get better. It'll get better and better every year. Next year, it's going to be the hottest ticket. Next year, people are going to be giving me money under the table to be on the show. It's going to be big. I've heard that. I've heard there's influencers out there, not me and not anyone we know, not Coach or anyone. Not anyone we know that I know of are getting paid to do videos. I mean, I can't imagine somebody paying me to do a video on their. I mean, oh my gosh. I mean, I don't think I'm the target audience for that. But anyway, yeah, there's a lot of influencers out there that, and so they do a review, and the review is paid for. It's paid for. So anyway, and I don't know if I should be mad about it or be jealous that no one ever offered to pay me. So that's probably, I want to be indignant. Oh, I can't believe those people do that. But at the same time, I'm a little jealous. No one's even offered to buy. No one's offered to pay us for our review here. So I think they know we can't be bought. And that's what I'm saying. And that's where it comes back to this. I know this Max Factor thing. I see all these sheets. I'm building the past database up, and I'm looking. We're going to be able to test. We're going to be able to test it and be able to show the advantage it has or doesn't have. Anyway. So I'm working on making it better. But I do think that it really maximizes. It doesn't let a fund like lose half its value, but pay like a 200% dividend and still be ranked highly on the list. That type of fund will never be up here, even though sometimes those types of funds can make a person money. It's never, the Max Factor really prioritizes safety. So anyway, we can tell who they are by the way they make those videos. I stopped watching them now. Well, I appreciate you being here. Futures income. Let's go see if the market's moving. If the market's not moving and you guys don't have any questions, I'm going to get out of here. But look at this. This is just a balancing market. This chart over here on the right is a volume chart and shows you the volume at each price level. So at this price level, 90,250, let's call it. That's the most volume on the chart. That's the biggest. That's the mean. That's the average. And that's right where we're at now. So I think future traders will say you don't have an advantage. I think future traders like to play outside in. So they'll wait for it to get out here, and then they'll short futures and try to play it back to the mean. Or if it goes down here, they'll get long futures and try to play it back to the mean. But I don't know anything about trading futures other than it's hard. But right now, I do know that this is a mean reverting market or whatever. And look at this thing. This thing's been trading this price ever since the 7th, which is about a week or whatever. We're on the 11th or the 13th. It's basically been balancing in this range, Bitcoin has been. It went and tried a higher range, and it did some balancing up there, but then it slipped back into this range. And this range has more. There's more volume there. It's the bigger. It's the one kind of guiding the whole chart, at least on this time frame that I'm looking at. So anyway, that'll be interesting to see what happens. Yeah, I know Chippy's on there twice. Um, what's one I could? What's one that I need to put on there that's not on there? I'm trying to think. I mean, I've already added PFIX, but next time I want to put a new one on there, I just need to throw it in Chippy slot, in Chippy number 2 slot. I try to do that. But yeah, good advice, Matthew. Hey, is dog in the factor? I don't know about dog. There's a lot of ones in there that are definitely dogs, but I don't know specifically if that dog's in there. So this is all right. Oh, Dogs of the Dow. This is an old theory. I mean, when I was selling stocks in the 90s, people believed in this theory called Dogs of the Dow. And it's a very sound theory. There's books written on it. It's a value investing theory, and it involves dividends also. Anyway, there's ETFs now that have turned it into an ETF, and you buy. But the theory is you buy the 10. I think you buy the 10 worst performing Dow stocks from the year before, or maybe you buy the 10 Dow stocks with the highest dividend. But usually that's because they're performing bad because the idea is Dow stocks are stable stocks. You have things like Amgen, Merck, McDonald's, Coke. A lot of these do pay dividends, but if you pick the ones that are down the most from the year before, their dividends are usually the highest, and they offer a value. That's what people think. And also, people say there's an advantage to buying if you buy the Dogs of the Dow, that you come out ahead the next year. In other words, so it's value investing. You pick the 10 stocks from the Dow 30 that are down the most the year before, and you buy them systematically. And, anyway, there's all kinds of papers and stuff written on it. But yeah. But no, here's what we're going to do. Let's go put DOGG on there where Chippy is. And we could solve 2 problems at once because this pays 8.7. Yeah. Heck yeah, that's all day long. We just solved the problem. And that's the way I try to do it anyway. The new max factor. Yeah, I'm really proud of this database, but this proprietary database, DOGG. But yeah, I used to sell this to Dogs of the Dow people all the time, and they would actually buy. But it had to do with dividends also. You'd buy it and then you would use the dividends because that's the thing. The reason they were down so much, it might have meant it's still a good stock because it's in the Dow 30 was the theory, but it'd been beaten up. And so lots of times it's paying a higher dividend. And I think probably the theory went, you probably took the dividend and reinvested it or whatever. But there, like I say, there's books on it, but I guess you could take the dividend and live off it. Yeah, all kinds of things. But anyway, okay, so that is now fixed. Now, I'm not going to start putting a bunch of closed-end fund crazy ones on here, Brad. What do you mean GGN would be a good one to add? Come on. This is some BS closed-end fund probably. I don't like these BS closed-end funds. Let me see what this one is. Yeah, it's a BS closed-end fund. No, I'm just joking. I mean, yeah, look at that. Heck yeah. How do we not already have this one in there? I mean, it only pays a 7% yield, but I mean, it gets a ton of NAV upside. But it's also related to that it's gold. So but heck yeah. I mean, yeah, GGN, but we don't have it. We need to find another duplicate. We need to find another duplicate. And I don't want to, and I'd never sort the master list. It's a long story. Don't ask me why. So I'm not going to sort it to find a duplicate. So I don't know. I thought we had GGN. There's no way we don't have it. Look down here. Here's all the BS closed-end funds. BCAD and ECAD and ECC and CLM and Sirloin and FSCO. And Do we not have GGN? It should be down here. This is where it needs to stay down here with its people. All right. Well, anyway, here's what we'll do. We'll see where PFIX is. We're just going to add a row under PFIX, and we're going to go GGN. And this one's in there, but that's the last VS closed-end fund that's going on here. We already got too darn many of those. Dude, if I keep putting those on there, there's not going to be any covered call list funds on the top 20. The max factors can't be taken over by freaking VS closed-end funds. I'm just joking. But anyway, if the closed-end fund has better risk-adjusted reward, it has better risk-adjusted reward. I mean, covered calls aren't the only way to get an income. We can look at funds like XPay that just basically sell stock. And there's other ones that do total return swaps. And even though that may, not be ideal in some markets it works perfectly fine so I think it's fair to look at any. I think that's called managed distribution, when you have strategies that basically just sell stock, or they do some strategy. They just literally give you your own money back. I mean, there's different ways to do it. There's, but that's not always the worst way to do it. In fact, that lots of times is the best way to do it. So I'll look at anything. But yeah, thanks for telling me about GGN. So we'll do GGN. So, we have that one, and we have MDST, and we have a bunch of the closed-end fund ones right here. Right there, we have tons of them, and that'll be on the closed-end fund Friday show. Futures income, you recently started using the distributions, reinvested in TQQQ and UPRO. What do you think of that? Well, yeah, I mean, you recently started using distributions, and so you're taking your distributions and buying triple leveraged Qs. So you're all in on the market going up, but heck yeah, as long as the market keeps going up. UPRO's the same thing, right? UPRO's just leveraged SPY. I know what TQQQ is, but yeah, UPRO is it's 3X. Okay. So it's the same thing as TQQQ, because that's 3X. One's pro shares and one's a different one. Yeah, no, those are that. Yeah, that's also, as long as the market keeps going up. As long as the market keeps going up. Let's look over here on the top 50 and see which ones are the best of the indexes. So let's sort of by sustainability. Okay, in the indexes. So it has to, and I'm not counting XYLG. That's BS that it's on there. So not including that one, we have QILD somehow, and SPIN. QILD, SPIN, SOXY really doesn't count because it's just chips. I mean, it's too focused. CLM's a closed-end fund, but yeah. So on the like super stable, and I would have never thought these get on here, but I mean, they both pay a yield, and they have, they protect capital. They do everything that you could want. They're both more stable than the broader market. IWMI is the next index-based one. I've always think that one's a good one that doesn't get enough love. IWMI, it's like the SPY is its stablemate, basically. Same fund. And let's compare it to like IWMY, which comes from Defiance, which is kind of, basically the same family as YieldMax, same philosophy, trying to pay maximum yield. It's a maximum yield product, and we can really see the difference there. Not that the maximum yield, if you're looking for maximum yield, IWMY, it had good yield, and the NAV was only down $2. I mean, But I mean, you paid $2.74. So I mean, you lost a lot of the dividend of the NAV being down. It being really so that's why IWMY is nowhere close as high as IWMI on the max factor. The max factor really prioritizes good, repeatable, sustainable type behavior where you can compound your gains. In IWMI, their NAV went from 48 and a half basically to just north of 50. So yeah, that's a really good look for IWMI, but any of those could work. I mean, maybe not IWMY, but IWMI, or what about old SPIN? I mean, no one ever talks about SPIN. If you need 8% and you need a real steady ETF, it's from State Street. They invented the SPY. I mean, not really a fair comparison because IWMI is based on the Russells, smaller stocks, more interest rate sensitive for sure on IWMI, and this is based on the S&P, less so a little bit interest rate sensitive, but so not the fairest comparison. But then what was the other one? There was another one up there. It was SPIN and what was the other one? I'm just obsessed with the diversified ones. I guess QILD. I mean, how the heck did QILD? I mean, QILD. You got to be kidding me. QILD from Global X. But, I mean, it doesn't look like the worst looking one either. At the same time, it's positive on NAV, which is more than a lot of these can say. It paid a 50-cent dividend, but the dividend is fully paid for, and the NAV's not going, and the NAV's going up. It's not paying a huge dividend because NAV's getting crushed. So it is definitely a legit opportunity, just one we don't always think of. Let's see what else on the top 50. SOXY's fine if you want exposure to the semiconductor index, to the SOX. And with CLM, if you like closed-end funds, IWMI, let's see, the next is Devo. I mean, Devo's kind of Devo and JEPI. Let's look at old Devo. But yeah, Devo or JEPI could work too. I mean, Devo, and I forgot to do JEPI. This is JP Morgan. JEPI is a value-based fund. They don't just blindly buy the S&P 500. They buy the 100 best value companies in there and sell options on the whole index. So hopefully they do a better job. They aren't totally capped because they're selling options on the index, but they're buying stock on individual stocks. So hopefully they have some alpha in their stock selection process. But anyway, Devo and JEPI, I mean, boy, that's a bad look for it's a bad look for JEPI, isn't it? Devo's spanking it. Devo is just absolutely spanking it. Now, Devo's NAV went from 43 to 45 this quarter. JEPI's NAV was also up. I mean, both of them paid dividends, but the dividends seem to be supported by NAV return for sure. You could do worse than either of those. Yeah, GGN wasn't going down. I was just giving you a hard time. VR. Of course, I know you know that. I got up and I was sad because there's no college football because I wasn't sure if the playoffs would be this week and then maybe next week would be off or whatever. But then I also thought maybe this week was off, and sure enough, this week was off. I should have figured that. But when I got up, the first thing I looked at was the football schedule, and then I saw the Sooners don't play till next Friday. But yeah, and of course Brad's BR's Georgia, who's going to be playing also. It should be a good time. It should be a good time. Hopefully my Sooners show up. You never know. And my Longhorns they're playing in the Citrus Bowl, and they aren't really my Longhorns, but I am sympathetic to them for sure. And every week when Oklahoma's not playing them, I want them to do well. So anyway, they're playing in the Citrus Bowl. It would have been great if they could have made it also. Wouldn't that been great if they would have made it also, and instead of playing Alabama in the rematch, we played Texas in the rematch. And I know our guys would really like to have that game back this year. I would have loved if Texas would have made it. You like A&M? Absolutely, Randy. I like all Texas teams, not Baylor so much, but dude, I root for Texas Tech. I just like Southwest football. TCU. I mean, sometimes I'll even watch an SMU game or whatever. I just like, football from this part of the world. Not so much Baylor, not Oklahoma State. I don't like football that much to watch those two schools. I'm just joking. Some years those schools have great programs, and I'm just joking. But yeah, no, it's next week's going to be intense. I mean, I can't believe it. Seems like just the other day they were talking sometime in the future that Oklahoma might be in the SEC, and I thought, Pete, that was crazy talk. And then I remember like 10 years ago, they were saying, yeah, someday we're going to have like 12-team bowl season, 16 teams, just like basketball. And I was like, that's crazy talk. And here we are, here we are. Yeah, I'm with you. Not a big Oklahoma State fan. Growing up in Norman and stuff, not a lot of love lost between Sooners and Aggies. So yeah, I'm with you all day long. And down here, it's kind of the same vibe between Texas and A&M, but I don't get in on that tribalism down here because I have liked A&M, and they've had some great teams over the years and some good coaches, and so I don't have the hate for A&M but a lot of people in Austin, they have the same way I feel about Oklahoma State. So anyway, I get that, I guess. All right, guys, why don't we get out of here? Appreciate you all for being here. We're doing the top 50 list live. I figure we might as well just do it live. I think that's fun. So tomorrow, Sunday night, we'll get back to normal with, I don't know what Sunday's going to be, but anyway, Monday's going to be Misty Monday, and we'll have Tesla Tuesday. Then we'll have Closed In Fund Thursday, I think. Right? Yeah, Closed In Fund, or is that Friday? Closed In Fund Friday. I think it's Closed In Fund Friday. Oh well, but we'll get back next week. All right, guys, thank you so much, and you guys have a great evening, and I will talk to you soon.